Hey there, my name is Karen Jones, content creator for the Society of Technical Analysts. We're back looking at the Bitcoin chart because this one has exploded higher. Now you can see that this is a midway consolidation, and when you're into all-time highs and you've got no more levels to look at for resistance, a good thing to do is to measure the flagpole leading up to this consolidation. And we can use this consolidation as a midpoint for the overall target. Let's look at this in more detail. We're moving now to a weekly chart. And as you can see, the Bitcoin chart has actually broken above this long-term channel with ease. So what we have done is we have measured the move higher prior to that consolidation and taken it from point of breakout. Now that gives us an overall target of around 145,000. However, en route, we have used a few Fibonacci extensions to give us additional levels. So the first one was taken from the low we saw in September 2023 to the peak we got in March 24, and it was projected higher from the low of July 2024. This gives us 127,000 as an interim resistance point. We've also got a secondary Fibonacci extension. This is taken from the July 24 low to the January 25 peak, taken from the low we saw in March 2025. This is located at 134.5-ish. So overall, this Bitcoin move is looking quite interesting. Where do we put our stops? Let's go back to our daily chart. We can see here that the overall bull trend is intact while above the 55-day moving average. And really that view is not going to be changed while that 55-day moving average underpins. However, if you want a more realistic trailing stop, depending what your risk is like, you can either use the cloud on a 4-hourly, giving you an interim stop here. This is your first level here, coming in at just below, it's about 119.5, and that would be a fairly aggressive stop. Thanks very much.